All right, let's jump into it. So, welcome you guys. Today I have Jesse from My Credit Guy. He's going to be talking to us about how we can bring buyers back from the dead. So, a bunch of you guys that are going to be watching this are mortgage lenders or realtors. And in our industry, especially coming into something like a recession, we're going to start seeing people that are having financial difficulties. And one of the things that we can do to help them is to A, get their credit scores up to a qualified position and or B, get them into a better FICO score bracket so that they can get the best interest rates possible. So really, no matter where people are on the scale, I think that My Credit Guy can be very helpful to creating more opportunities for us in our business. So Jesse and I have known each other for it's probably been at least 3 or 4 years now at this
Yeah, I was
point.
gonna say probably four. Yeah, for sure.
And I met him through my previous mortgage loan origination job with Kelly Zitlow from Cornerstone Home Lending, which she's incredible. Absolutely
It
love
really
her.
is.
And I'm so grateful that she kind of introduced me to you guys because you guys have been very influential in my business. And it's given me, instead of me being able to, like, instead of me having to just say no to people, it gives me
Yeah,
the option to really say, okay, not right now. Here's what we can do to get you there, though. So I'll let Jesse kind of take it from here. And then at the end, I'll give some testimony of some of the clients that I've kind of put through the ringer with you guys and explain kind of the path and my experience and like the outcome of those opportunities.
yeah. Well, thanks for the intro. And in those 4 years that we've known each other, it's been great to like see so much of what you'll be referencing at the end, like just clients come full circle, right? So, I mean, I guess I want to start off with just kind of emphasizing some of what you've talked about so far as far as like what the opportunity will be if you partner with a company like ours, right? Like what we create for loan originators and for real estate agents, right? So the real estate agent piece is actually kind of wild. Like over the last 2 years, we've started to talk directly with more real estate agents that are having a lot more conversations about credit than maybe I expected, right? And so it's coming up and they're having those conversations more often. And now what you have is really before, when I talk to people before they get acclimated with who we are, get signed up with us and start implementing the process, there's really two options. Either, hey, good luck, here's some things that you can do. You're not, I can't, it's more of a no, right? And then come back later. Or I'm going to handhold this opportunity to help you fix your credit. And so what happens is a lot of new both real estate agents and loan officers that I run into, they do spend that time. There's two things that are concerned there, right? One, your time is so incredibly valuable, right? Like if you're somebody that lives and dies off your personal production, every single time that you're spending that time just nurturing that relationship and helping somebody fix credit, that's just more opportunities that you're not actually, getting in front of new people that are going to create revenue for you, right? Like to either write a loan or to sell a house. And so it's just not the most efficient use of your time, number one, right? Even if you are new. The other thing is as much as I respect and love all the loan officers that I work with, I'll say loan officers specifically because I don't run into this as much with real estate agents. You they just don't. There's even with the ones that know a lot about credit and a lot about collections and charge offs and how to handle those things. If they're that effective at doing those things, again, their time is better spent somewhere else. But there's often times where I will inherit, a loan officer that's been working on somebody's credit for 2 or 3 months, and I'm having to undo some things and unteach some things that aren't exactly the most effective, right? So, My Credit Guy specifically is not just a credit repair company, right? Like we are a credit repair company that is truly working to be a partner to loan officers and real estate agents for a mortgage, right? So when you look at credit, looking at credit related to the underwriting guidelines and the details that are specific to get a mortgage done is different than just general credit, right? The scoring model is different. And then, situations like, for example, Danielle, you'll know this, right? Like if the client's going to FHA, a charge off isn't necessarily as important as a collection, right? Don't need to include that into DTI. So it helps us zero in on what is truly the priority in that, in the debt that we need to work to resolve. So again, that's, I think, what you get with us that's so much different than, any other company amongst other things that are in play with how My Credit Guy services their client. So But yeah, for us, that is what we're striving for with each client, is so that somebody that is in a self-producing type of role, they can truly feel comfortable knowing that that relationship is being maintained first and foremost, like they would want it to be, in a very respectful and productive way. But then also that we're keeping that loan officer or real estate agent in the loop as things progress with credit improvement. So you're able to stay in touch with your client on a much more limited basis than having to coach them directly.
Amazing. So I want to kind of jump in here and kind of give my main testimonial here, which is I actually sent one of my past tenants to you guys right when I first started having her live in one of my properties. And like I knew she was going to be renting my place. So I actually didn't want her to buy right away because she was renting. So that's good. And I
Right.
actually didn't even expect her to go through the process with you guys. And when she left my property, she didn't leave it in the best condition. And I was like, good riddance. She's gone. Literally a year later, I get a text from, well, I've been updated on, from my credit guy for, every couple months they touch base with her and they do a little quick email like, hey, Danielle, we reached out to this tenant. Just wanted to let you know that we connected or we didn't connect or whatever. Like they always give me the status update. I literally texted you guys and I was like, yeah, guys, like she and I have like we had a like not a good exit. So she's probably not my client anymore. A year later, she texts me and she's like, hey Danielle, I signed up with that credit group that you told me about, and I'm gonna be ready to buy a house in a year. I'm like, first of all, she's texting me and I didn't want anything to do with her, which is like crazy. And now it'll be fine. Like
Yeah, sure.
obviously water under the bridge, but like how insane that like somebody that I had absolutely no intention of following up with, did not expect her to ever be able to buy a toaster, and now she's going through the process. She's subscribed to the my credit guy mission to fix her credit, which means that not only is she like dedicated to making this happen, like she's spending money on it monthly to get her credit score up. So now her like when I'm qualifying her like as like is she going to be a client or not, it just strengthened her score in like how important she's going to be in my business because I know she's dedicated to making it happen
Right.
versus somebody that maybe is like, oh yeah, like I'm going to get my credit score up, but then doesn't do anything about it. So it just gives you like that next level of like knowing who's very intentional about making homeownership a reality. And so it gives you that separation and helps you prioritize the people that
Sure.
are coming through your door. So even if they're not qualifying buyers now, you can say, okay, they don't qualify now, but they are interested enough that they're willing to do the work, spend the money, and get themselves out of this FICO credit score hole in order to qualify next year. So I think it's really important to just to like strategize on who do you spend time on.
For sure.
And my credit guy has been the main like follow uppers. They've been so incredible in their follow up that like they literally brought this buyer back from like the dead. Like she was dead 5 times ago. Like
Yeah,
I never expected her to come back, and here she is. So I think that's a huge testament to not only like the level of um, loyalty that you guys have to the person that referred you that client, but also like the level of follow up that your company has is so incredible that you actually brought somebody back that I
yeah,
never expected to be back. So I think
yeah,
that's really important to create more opportunities going forward. And going more on the side of like, obviously, yes, it's great when we can make more money. That is important. But also at the end of the day, you're helping a family out into home ownership that maybe never would have gotten there without the resources of something like my credit guy.
yeah,
So
for
I think
sure.
this partnership has been very eye-opening and very important in my business. And of course, I want to spread the word and give more opportunities to the people that, are in my sphere of
For
influence,
sure.
and to be able to help the people that need it the most in our industry. So,
Yeah. What's interesting about what you said is that one of the most common mistakes that I've made, and I think a lot of like salespeople, right, like will make, is that you get to the point where you feel like you understand your business well enough that you can tell who's going to buy and who's not. right? I mean, we make these assumptions after we get to a point of some level of comfort and understanding our buyers. And sometimes we make the wrong assumption, right? Like, and that mistake could cost a lot down the road. And so, for us, our whole system was, I mean, we've been in business 10 years now. And so, and Danielle, you know a little bit of the backstory, right? So Sam and Trisha Parker, husband and wife, they co-founded the business. They've been in the industry for a while, but they wanted to do something different. And so, like, Sam specifically is so driven on customer experience, and like he sees things like ahead and around the corner, like far into the future as it relates to how a client will experience communication. So it may sound wild, but like even if somebody gets referred to us and they say no, or they say or they don't say anything, they don't even pick up the phone and take our call to do a review. We have content that's being dripped to them over the course of a scheduled 2 years, right? And with that good, so like we do that intentionally because we want to continue to add value for those people that are in that situation. But then we're also working through a call to action on every single piece of that communication to say, is now a better time? Are you still interested in buying a home? Right. And so you might see somebody that you completely forgot their name, 12 months down the road. And it's like, well, they just signed up for credit repair.
Yeah.
And he does, when Sam built this, it is intentional, right? Like if somebody is interested in buying a house, they eventually will. Some won't. I mean, when it all comes down to it. But again, it's not our place to assume who will, right? And so we should act as if they're going to at some point, and let's make sure that we stay in front of them with, again, good content, good value to ensure that they're engaged appropriately.
Yeah.
Now, the other thing I'll say is that I look at so many credit reports, right? As you can imagine. And 99% of the time, it's ones that have a lot of challenges, right? Like lower credit. And one thing that's usually always consistent is that when I have somebody, a loan officer that sends a credit report to review with me, one of the first things I do is I go to the bottom and I look at the inquiries of like, what have they been attempting to purchase recently? And it's almost always, at least half the time, depending on if there's a relationship with the loan officer or if they, are a new type of relationship that's fresh. You'll look back at the inquiries and you'll notice like they applied for a mortgage 6 months ago, right? And you could almost assume that the reason they didn't move forward with that mortgage 6 months ago is because of the credit situation that they're currently in today. It was the same as it was 6 months ago. But that company, that person, they didn't dive in and say, instead of just no, right? They say, here's what's next, right? And that's really the experience that we should be creating for these people at every level, is to say, if it's not today, that doesn't matter. Let's make a plan. And then what happens is when we do a credit review, right? Like there's a lot of people that when they know that they have credit challenges, they'll say, man, if I could get into a house in the next year, 18 months, 2 years, that'd be fantastic. Well, the average client with us, they're in service for 3 to 5 months. The average client. I mean, there's exceptions to that. Obviously, there's plenty of people that make it through our system in less than 45 days, right? 30, 45 days. They just have one thing to deal with. And they're in and out. And there's also people that, 14, 16 months they've been in service because they were 6 months in, things were going good, life hit them, big medical expense or a car broke down. For some people that are in this situation, a $1,500, automotive repair could set them back 3 months, right? That's okay. We stick with them, right? There's a lot of times that we'll pause service, but we'll still check in, right? Is now a better time? Can we reassume service at that point? And we'll stay with them.
Yeah. I think the important thing here too is that like you guys understand that life be life in sometimes. And,
Yeah, it
people
does.
that are obviously had financial strain that got them into a place where they have lower credit scores in the first place, they're probably not as well leveraged as somebody that has a great credit score to be
Yeah.
able to throw money at things when life happens. So
Yeah.
when the car breaks, when the, AC unit goes out, whatever that might look like. So I think, having a built-in 2-year follow-up plan, like in that 2 years, if you're not ready at some point to at least start the process, then like that's a long period of time for you to have the ebbs and flows, and hopefully you can catch them on one of those opportunities on when they're going uphill and not downhill.
Yeah.
So it gives the
I mean, let's
longevity
just be
and the
honest,
money.
right? If that's the situation and you're left to yourself as a self producer with as busy as you get,
Yeah, I'm
like
not following
how
up.
are you going to prioritize that call? I mean, it's just not going to happen, right? Like, in
Well, and to your point too, it's like, do you spend time on the people that can't qualify right now? Probably not. But now if you partner with you guys, now that follow up is built in with what you guys are doing, and you're not discounting people and saying, sorry, you don't qualify right now. So like, you know, you're like leaving money on the table for future opportunity, but also you're doing a disservice to those clients. Like, if they really want to buy a house and you're just saying like, sorry, I can't help you, like that's not good enough. We need to be better in our
yeah,
industry to be able to help with, if somebody wants to buy a house, like let's draw the roadmap. You're here at point A with, crappy credit score. How do we get to point B, which is home ownership? Like,
for
let's
sure.
draw that map together and figure it out. And oh, by the way, there's checkpoints along the way to make sure that you're actually making progress, which is what my credit guide does for you guys.
Absolutely. And so you now have the opportunity. So instead of saying, again, back to what we were talking about at the beginning, no, or I'm going to get super involved to help you because I am committed and I really want you to win. I mean, that comes from a good position in the heart, right? For sure.
Yeah.
Um, but this is a perfect middle of the road, right? You should almost be excited to say, this is great, right? Like, I'm sure that you know that your credit is challenged just a bit. I have the perfect partner for you, right? They're going to start off with a free credit review to break this down. During that review, there's a lot of aha moments for clients. There's stuff on their credit that they truly don't know about. It happens all the time.
Yeah.
They also sometimes think that something that is here's what I'll say. If somebody's had trouble in the past and they're back on their feet to some extent, but credit is still lingering out there in a negative way, the timeline that took place, there's usually some negative emotion that's related to that as well, right? So like they use, like, I see people just kind of like avoid it, and it happens a lot. And so we're able to dive into that, and because there's an emotional attachment to it, a lot of times they think it will take them more effort and money to overcome it than maybe what is the reality, right? So
Right.
we run into this a lot with people that had a car repossessed, or they did a voluntary surrender. Those are large loans, right? And so what happens is that they might see that $20,000 loan that they took out, and they lost the vehicle, right? When there was, say, 5,000 paid off, they're at $15,000. That looks like a huge amount of money. But then when you tell them, it's super common when you turn in a vehicle for that to be sold through the wholesale channel or at auction, and that amount of money it was sold for needs to be removed from that $15,000 balance, right? Even if they sold it for 8, you don't owe 15, you owe 7, right? And so it is so common for banks to receive that money because of like how they resell vehicles, but not update that on the credit report. And then on top of that, really one of two things to say, like, this is aged somewhat, right? Now we're at $7,000. We could probably get this settled for $3,000 or $4,000, and then it's taken care of, right? The other thing is we'll look at that and we'll say, like, I'm not even going to touch it, right? Like, you think this is a huge amount of money, but this is a charge off account, right?
Yeah.
Yes, it's impacting your credit, but you've got 2 or 3 collections from this last 12 to 15 months that are all less than $300. And if we address those, you'll be where you need to be. We're not even going to touch that. Like, we have to remind people in that time that you don't need perfect credit to buy a house, right? And so now all of a sudden they came into this situation with this huge weight on their shoulders. All they can think about is this car, right? That obviously that was not a good day for them, right? Even if it was voluntary, it's not. But if it was involuntary and like they walked outside and their car's gone, like, that's not fun. And so they're coming in with that, and they're leaving with a better understanding of that this really isn't as big of an issue that they thought before. And that becomes somebody that's very encouraged to hunker down and make it happen. We see it all the time.
Yeah. I think too, there's not enough education around how FICO scores work. I mean, you turn 18 and they hand you a credit card. Like, sign on the dotted line, you have a pulse, like, and that doesn't serve, our community either. So, especially when you're young, you'd make really dumb decisions, especially when it comes to borrowing money. Like, we just weren't taught for the most part. Most people, you know, even my parents that, they're well off, will
Damon, am I frozen? Is she?
sometimes. Are you there?
Did I freeze up there?
I think that's me.
Okay.
Am I good
There you
now?
go. You're back. You're good. Yeah,
Okay,
yeah.
cool.
Yeah, we can hear
Um,
you.
I think that there is not enough education on credit in general when you're younger. So the likelihood of people having young and dumb decisions on their FICO scores that show up when they're about in their, late 20s to early 30s is pretty high. So if we can just help, like, you know, I think you guys do a great job of educating. You don't just say like, "Oh, hey, pay this off, do that," and like without any education behind it. I think you guys do a really great job of explaining and teaching people along the way to
Yeah.
empower them, so like they learn out of this process too, which then sets them up for success later in life.
Absolutely. Like it's by design again with our team. They have a one-on-one credit coach that's assigned to them. If a client enrolls, that is going to be their person that's going to stand by their side and really in front of them to lead them. And our goal is to make sure that they understand in the best way that we can how to make sure that this client doesn't put themselves in this situation in the future. And
Amazing.
so, I mean, we firmly believe that that type of education and opportunity with home ownership, we're making like generational changes.
Yeah.
There's no
Oh,
question,
for
right?
sure.
With the
For sure.
opportunity to purchase a home as a fantastic growing investment, and then just the ability to share good information because there isn't a curriculum on how to understand. I mean, there is, whether they're out there. Like we have a credit ebook for kids that we think is fantastic that everybody should be putting in front of as many people within their family as they can. And when we start to distribute that, there's adults that are like, you know what? Like I should actually like as I'm going through this, I'm learning myself about some of these details. So
Yeah. I'm gonna need a copy of that.
yeah, for sure. Yeah,
I'm like, if you're seeing this on Instagram, drop a link, drop a comment below that
yeah,
says
for
kids
sure.
credit, and I'll send you a link.
Yeah, for sure. We can set that up. Uh,
Amazing.
Great
Perfect.
opportunity to engage. And so here's I'll do this quick. I don't know how much time we have left or what you're planning to record, but I did want to create like that visual of like what a portal looks like for
Perfect.
a
Let's do it.
referral partner. We'll show
Yeah.
that and then the client and then really that's it for me, right? So
Perfect.
here's a little demo account that we created for those of you that are familiar with the sitcom The Office. We modeled this off of Michael Scott as a loan officer. Can you see my screen?
Yeah.
Cool. So this is Michael's portal. These are all, I'm going to get to these, but these are additional resources that are available to anybody that is with us. Now, there's no cost to use My Credit Guy. Like as a real estate agent or a loan officer, like you are a partner if you're committed to using us for credit repair, and all of this comes with it. So there's a link to Credit Builder Card, which is what we believe is the best opportunity to quickly create, an established new credit with a secured credit card. You've got a white label landing page, so we can build you a custom landing page so that you can direct your clients to sign up for a free credit review. It comes into our system. It's assigned to you. We notify you. All of these are options. And then there's a breakdown. We'll call this essentially your pipeline of clients that are in service with us or have been referred to us more specifically. The leads that are here are essentially people that we're working like this is new, right? We just received this from you. This is what your view will be as a real estate agent or a loan officer. And then you'll know, like we've tried to contact them 5 times. We haven't had a response. And then there's more you can expand, right? Like this person is getting ready to sign up. We're pulling credit and they will be enrolled soon. These are your active clients. I'm actually click Kelly here. So that's ready for us. But you'll notice like I clicked on the name and there's more details. Like with Phyllis, there's contact details. We're actually like enhancing this right now. So there'll be even more specifics on what's been discussed with Phyllis on that initial call. And then suspended clients, none of them in that category, which is good. Closed out clients are like this was a win, right? platinum closing. We've confirmed with Danielle or Michael in this situation that credit's gone up and pre-approval has been issued. When it's time to refer a client at the very bottom here, you'll notice we're just asking for contact details. If they're a veteran, if you're a real estate agent, you're going to answer the question on, do we have a preferred lender that's already involved in this relationship that you want to be kept up to date? If you're a loan officer, you can add in your realtor relationship that maybe referred this client to you, and they can get the same milestone updates that you're getting on credit improvement progress sent to their email as well. But then, again, so you don't have to log in here to get updates. We're going to be sending you those proactively when we send a review to the client. We're going to include the loan officer and the real estate agent if they're attached. So everybody's going to be on the same page. But if you'd like to, you can always come in here and check out what's happening with the people that you referred. Now, earlier I clicked on Kelly's client profile. And so this actually gives the loan officer or real estate agent access to Kelly's referral portal, right? So, or excuse me, her client portal. So Kelly is the client here. Dwight is the My Credit Guy credit coach. Again, loan officer is Michael Scott. We want to co-brand that experience that the clients have as often as possible so that they're seeing Danielle's face as much as they can. Danielle might pop in at the month 2 review after she saw that the credit went up, 40 points and they got a collection off. She might call and say, hey, fantastic. I want you to know, I'm still on the sideline cheering you on. And then all the details of the notes in progress are going to be listed here. The only other, go ahead, Danielle.
So what I love, I'm going to back up a teeny bit. I absolutely love that you can have both the realtor and the mortgage lender in on whatever is happening here. So you guys have really set it up that it's not just even just a partnership, it's a team that's behind this client that's helping them get through the finish line into homeownership, getting their credit up. And I think something else to remember too is that this doesn't just affect homeownership. It affects how they borrow money across the board, whether it's auto loans, whether it's, credit cards, things like that. There's so many reasons why you would need to have good credit. This is just obviously what's affecting our business, but for them, it's so much more. Oh, you're muted, Jesse.
I am. I'm notorious for talking on mute. I actually just had a conversation with a insurance agent this morning where she's wanting to refer a business to us because your insurance raters are affected by your credit score. Now, she can't see the score, but she can see the category of the grading system. And I mean, who wants to pay more money for insurance? I don't even want to pay for insurance. I don't like it.
Not
but
me.
there's no point. So the last thing that I'll show while I have this up, excuse me, is the marketing hub. I just want to show this because one, it gives some exposure to what we have available, but this is just another example of how My Credit Guy is super focused on being a good partner to those that are referring business to us. We want to take anything related to marketing around credit off of your plate. We've got first-time homebuyer presentations, general credit education that can be presented virtually or printed off and presented locally. And then also a couple marketing kits. This is kind of like the credit restoration kit is here's the standards, here's how you handle collections, here's how you stay approved. Once you've got your pre-approval and you're going to shop, here's some things to avoid. And then the credit ebook for kids, as we talked about earlier. But then in addition to that, there's subject specific content here, right? So everybody talks about the Credit Karma score, why is it there? Why is it always wrong? This gives the backstory of that detail. They're actually different companies, right? FICO and Vantage scoring solutions are different entities. They have different products. So it just helps answer some of those questions that come up often. And you'll notice at the bottom left-hand corner that we've allowed this to be co-branded, right? So you can drop this into Canva, put your headshot, company logo, contact details, all there. But really, look, it just continues to go on and on. This is all content that we're creating for our referral partners to use and leverage on a daily basis.
That's amazing. That I think empowers us to be able to share more information and get people really to know that there's solutions for people that maybe think that homeownership isn't achievable or obtainable.
Yeah.
This gives us as the real estate agents and the mortgage lenders the ability to start talking about those things. So I want to kind of wrap this up with one big change that we're going to see coming up soon in mortgage credit, like how we're looking at it and how we're using it to qualify. Realtors probably don't know this as much as mortgage lenders, but obviously we're changing the way that we look at FICO scores for qualification. And instead of just looking at a snapshot of right now, eventually we're moving to looking at more of a historical representation of credit. So can you talk to us about what that looks like and kind of what to expect in the future of what you know so far?
Yeah, so the biggest update is that they've pushed it again, right? Like we were supposed to make that transition at the end of this year. It's going to happen. It's just a matter of when. And what they're doing is they're actually making a few specific changes. One of them that you talked about is that we're moving to a trended model, right? So like how you manage the last 24 to 36 months of history, that rolling detail is going to be more impactful than ever before. Authorized users, I mean, they're like gold right now for the most part. If you need to establish credit, they're just not going to be worth as much in the future. It's just the whole kind of layout of what we see as value is going to change just a little bit in some categories, but the main things are still the same, right? Like your payment history is the most impactful. Your balance to limit ratios is the second, right? That's consistent with both what will be two different scoring models that are rolling out. So it'll be the FICO 10T and the Vantage 4.0. Now, again, that was supposed to roll Q4 of this year. It's the third time that it's been pushed, and it's in a to be determined status. But it's so important for us to be talking about this right now because that impact that you're making today and how you're managing your credit will be affected, will create the effect that you'll have with this new model. So like what we do today, when this change happens, absolutely will make an impact. And that includes things that don't report to credit today will be, right? Like rent, cell phone bill, right? Like utilities, all those things that are now going to be, an effect on your credit is a big change.
Yeah. So I think the important thing on this particular note in general is like the earlier that you can have an intervention with somebody that has poor credit, the better, because at some point in the very near future, we're switching to a model that instead of taking that quick snapshot of like, what does your credit look like right now? Instead, they're going to be like, okay, great. Here's what it looks like right now, but also what has it looked like for the last couple of years? Because
Yeah,
that is going to be, they're going to see how people have borrowed money for a longer period of time. So it's not going to be
absolutely.
as easy to get somebody to have a credit repair and jump into homeownership as quickly. So
Absolutely. It
now
also
is the time.
one specific thing is that like it's actually going to not just affect people with challenging credit, but for those of us, for the people that have good and great credit, it's going to affect them as well because, like, let's say that you're carrying a maxed out credit card balance for 6 months, even though you have the money to pay it off. You can pay it off right now, and tomorrow Danielle could pull credit, and I'm good. Well, on the new model, it's going to say, well, Jesse's in a good situation now, but for the last 6 months, he's had that card maxed out. So it's that true like trending behavior that they're going to be looking at that's going to be an impact. So that's everybody, right? I don't care if you think you have 800 credit right now and you're not understanding like the new way of how they're going to assess risk, you might be not in trouble, but
It
people that
won't
have
be good
800
for
plus
you.
credit score, they want it, right? Like
Yeah,
they stay on top of things. So
for sure.
understanding the details are
And
important.
I think we won't really be able to see the implications of what this change will create until we're there, right? Like we've
Correct.
never really had a trending model when it comes to borrowing money in real estate. So I
Right.
think this will be a very major change. And honestly, like nobody's talking about this except for you guys. Like you guys and like Kelly Zitlow, those are the only people that have kind of talked about this. And I think that it's important because it's going to impact our clients in ways that we can't even imagine right now. So the
Right.
best thing we can do is start talking about it, start getting people ready for that change now, because in 2 years, in 3 years, in 4 years, like that's when people are going to start feeling the major effects of how they're borrowing money now.
Absolutely. And the good news is we've already built multiple presentations about the education around this change, right? So like you don't even have to go do the research. I did that hours and hours and hours of research and white papers and like it was
All the
wild. But I'm a geek and I love all that stuff, right? So it's like I'm
things.
like reading 10 pages worth of data analytics, but you don't have to. We've captured it into a presentation so that people can understand it and apply it appropriately so it'll affect their credit in the best way possible.
Amazing. So let's talk like tactical. Like if somebody wants to start creating a relationship with you, and especially as a realtor or mortgage loan officer, like where do they start? Like, do they follow you on social? How do they get on your email list? Like, give me the whole how to connect with you.
So all of those, right? Like whenever I connect with somebody, I would love for you to follow my social just because we share so much content around education and anything that's real time. Like literally after this, I'm jumping off to say everybody talks about the three things you shouldn't do if you want to keep your credit. I have three new ones. It's like timeshares should not exist. Don't get one, right? Credit cards, make sure they're on auto pay and stop signing as a co-signer for your kids on their automobiles. Get them credit established before we get to that point. Like those are the three, just because I've seen just messes that I've ran into like in the last 2 days. So anyways, stuff like that is just good. And even to be able to share that, right? Like you don't have to be the credit expert. That's what we're here for. And so social media, Facebook, Instagram, I'm getting better at Instagram. I just like I'm the old generation, I'm dinosaur, right? So absolutely Jesse.Brecht on both of those. And then email, right? So my email is jesse@mycreditguy.com. We have a Parker team is the team that I'm on. You can email Parker team at mycreditguy.com. And then my cell phone number is 319-551-8263. Like that is, I get texts and phone calls about credit all the time. And that's the best way to communicate with me. So any of those that you feel comfortable reaching out, we can connect you. Damon here is on the call. He's on our team. We can get you set up with a referral portal and then do a full demo, right? Like we gave a little snapshot there, but we can help dive in and answer any questions.
Yeah, amazing. Well, thank you so much for your time, Jesse.
You bet.
I love sharing your guys' company and our partnership. I'm not about gatekeeping. I like to share the tools to help our industry improve, and you guys are a huge part of that. So I want to thank you guys
Thank
so much
you.
for what you do. You're literally doing God's work. You're helping us follow up with clients that we have buried. You're helping us to qualify people that never probably thought that they could
Right.
ever own a home, and you're impacting lives in such a huge way, and we get to be a part of that and help get the right people over to you. So
Yeah. Well, thanks for being a part of that. Thanks for having me here today. You're an example of a great partner and we appreciate you very much.
awesome. Well, thanks so much. And for everybody that's joining the call, thank you for joining. And again, if you have questions for Jesse and the team, please reach out to him. I promise it's one of the best things you can do for your business.